Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is July 10th edition of Market Outlook. So, boy, oh boy, do we have interesting markets, flight into all sorts of instruments. Let's get into it right away and see where we are. This is definitely a trading market. You have to stay with a totally flexible mindset because anything can happen. We're definitely in a blow off type of scenario, especially in debt instruments. But let's take a look at the equities market and see where things are setting up. Well, as you can see, really good action this week. Net, all the US equities markets ended up positive. What's interesting is NASDQ started to really pick up some steam, closed up 2.5%. Some semiconductors, things like NVIDIA, AMAT, really have done well. And that put the pedal to the metal on NASDQ up 2.5%. Still about flat for the year, lagging, but picking up the rear now quite nicely. Overall, what was interesting also is you got some accumulation occurring here in the NASDAQ where you don't have that, particularly in the other indices. So even though they're leading, NASDAQ coming on strong. And as you can see, accumulation days and distribution about equal. So this week's rally, with the exception of Friday, was on relatively light volume. So just take a note of that. And so as we start approaching or at new highs in the S&P, really want to see some volume come in to confirm the strength if there is follow through on this rally. So again, overall volume leading by NASDAQ, sort of neutral. Price action as we're getting to new highs, certainly positive. We're in positive phases across the board. Okay, let's take a look now at our sector summary. Again, interesting is still what we have is leadership in utilities, energy coming up pretty strong here. And again, for the week in terms of sectors, utilities lagged, which is interesting, right? As interest rates continue to move much higher, including US Treasuries, utilities sort of lagged. That's more of a positive sign that other leadership is showing up. So in terms of really good performance for the week, you can see home builders picked up here. In addition, semiconductors acted pretty well, up 1.6%, basically matching the S&P. That is pretty positive. But again, the consumer discretionary, also a good sign, right? 3.3%. You definitely want to see discretionary spending pick up. Those are good signs overall in the scenario of looking at sectors. The bigger picture, however, don't forget, utilities still leading. It's interesting that energy is picking up as well. Maybe that's confirming a potential buildup and positive energy in the overall economy. So as it stands, consumer staples and utilities still one of the top performers here. So it's sort of a mixed message, but improving. Okay, and as you can see, the action on this lower chart, you can see the number of sectors up versus down. It's really tilting in favor of an up move here. That's confirming. That's really a good sign. And this particular chart is quite helpful. There's a good help section right here. And basically what we're looking at is move of the index to stay above the 200, which is that green, and that you have a predominant number of up sectors, which is the green here, improving over the red, which are sectors that are down over a 6-month period. And as you can see, we're really starting to move up pretty strongly here, and that's a positive sign. So net sector analysis, with the exception of some of the more defensive sectors, still very, very strong. Things are improving. Okay, let's take a look at market hotspots. And this is telling you, again, a little bit more detail across a bunch of different ETFs. Let's take a look and see what's happening here. Well, first of all, you can see metals, commodities, still strong. And guess what? Brazil, definitely commodity-driven economy. Latin America as well. These were all top gainers on Friday. And really, you can see tremendous positive momentum in all commodity-related plays. And that's countries. And guess what? Metal and metal mining up 7% for the week, handily beating all the key equity indices here in the US. That's a positive. Now, what's not so good is some emerging markets short, right? So obviously the inverses are getting hurt. Long volatility definitely got hit as we made new highs. One thing to note, and we're going to get into this a little bit more, is that even as we've hit new highs, the volatility measurements are showing poor relative strength. So that is a cautionary point. I'll get into that in a few minutes. And again, look at this. Gold miners. Again, gold miners, metal mining, all of this extremely positive. Silver up 7% for the week. And guess what? Up 2.7% for the day on Friday alone, outpacing the equity indices as well. So again, more of a positive sign for the economy. Silver is definitely part industrial, and it's also got the inflationary component as well. So gold miners on fire, leading sector this week. Definitely one of our holdings in several of our models. In fact, we've hit over 100% profit in or doubled our money handily in the gold miners. So again, focus, it seems, no matter what, that the gold mining, silver, commodity-related metals plays really doing well, with the exception of copper. Copper definitely lagging, and so some of the home building and directly related to construction is not doing quite as well. So just take a note of that. So now let's take a look at the internal health and see what that's been saying. We like to look at the market internals just to see how those are handling and if they're overheated or not at the moment. So first of all, as I had pointed out, this chart up here is the up-down volume. You can see we hit a little bit overbought earlier this or mid part of the week, and then because of the lighter volume, we sold off. You can say that that is a little bit tenuous. I would like to see that a little bit stronger. But again, what we're looking for is really a confirmed signal in all of these indicators. So the McClellan has to get overbought up here, or preferably up here, and cross back down under the zero line. That has not occurred. If anything, we're back again to higher levels, potentially at overbought, but not there. When it gets to those levels, it's more of a positive to a negative until it turns down and confirms, right, crossing that midpoint. And again, on advances decline, it looked like we were starting to roll over, but kicked back over. So advanced declines on the S&P 500, positive territory. McClellan, definitely still in positive. A little bit of concern, no volume on the follow through. Would like to see that a little bit stronger. And as I mentioned, we did get one good solid day on Friday with decent volume across the board in the indices. But generally, the sideways action during the week was a point of digestion with lower volume. So really, as if in fact we can break out to new highs, that's really positive. One of the things I also want to point out on the spider chart is a break under 200 would take out the 200-day moving average. And of course, right now we're basically right at the old highs. And if we could power through on some good volume, there's no telling exactly how far we can go. But I will show you what our first prognostication is if we can get through these recent highs in the next couple of days with some good volume. Okay, let's take a look at the composite, the NASDQ composite, see what the internal health of that market is looking like. And again, similar. Now, as you can see, the McClellan oscillator, which is this here, more of an intermediate term, very, very positive, right? We got oversold, crossed the midpoint, that was your signal, and now starting to really gather steam. And again, strength often occurs at overbought levels and staying overbought. That's a good sign until, again, it starts crossing negative. Now, that did not occur here. So overall, similar scenario, volume light. So it's not surprising. Not a lot of conviction. People are sitting on the sidelines. Again, this volume indicator sort of hooking down, even as the composite moves up, moves into positive phase. And again, you could almost just highlight. Let me clean that up a little bit here. You can almost just highlight the compression zones, which are fairly wide trading zones. So again, I would be looking at, as a critical level, the low that was put in right after Brexit and these recent highs right here. Let's get some follow through. We'll end up in a few moments looking at where we might find some ultimate resistance. Okay, let's take a look at the next chart. So overall, so far, market internals in our favor. Can't really argue with how strong our new high, new low index is. We're staying above the 70% level, even above the 85% level. That is really strong, and it's basically running true to the market. This is confirming and not overheated and turning down. So overall, new high, new low ratio in the S&P looking really strong. Now, different scenario here. In the NASDAQ 100, you can see we just passed above our 50 line and hooked back up. So in essence, we got overbought here, turned back down beneath the 70, had sort of generated a signal. And as soon as we came back above that 50 level, sort of the midpoint, sort of generated the reverse or a buy at that level. Obviously, what we like to see is a sell coming all the way down here, and then a potential reversal back up. But in this case, all we can get out of it was a bit sort of down to here with a cover just recently and a positive. So overall, new highs, new lows, not as strong as the S&P 500, but definitely now reversed and in positive territory. So overall, market health definitely holding up for the markets. Now, interesting. Here is short-term volatility. This is the VIX. Let's take a look at what that's telling us. We did have, there's a bit of a mixed message here. Look, when we hit basically up here, new highs. Volatility was trading a bit lower. That was positive. Now, on this sell-off and the Brexit, right, we got to the outside of the Bollinger Band, which was, we were mentioning, was extreme pessimism. When we hit the lower end of the Bollinger Band, right, that's extreme optimism. Not quite there. So, however, since we are at basically new highs and the volatility has not matched the new lows, there's a little bit of a divergence indicating some level of nervousness still here. And of course, people are, and that's why we're getting that huge move into rates, bonds, anything, stocks, gold, you name it, junk debt, it's all going up. So people are moving money into all different types of assets across the board, looking for yield anywhere, and also some safety. So that's why yields are going up at the same time. Bonds are going up, yields are going down. At the same time, the stock market is roaring as well. Okay, so, and again, here we are. If we can get down to the lower end of this Bollinger Band, I will alert you and let you know that would be a sign of extreme optimism, a little bit overboard. We're not there yet, so this is all in positive territory. Now, another way we like to look at sentiment is looking at short-term versus long-term. I think over the last week I had mentioned that sentiment had hit oversold or high pessimism on the Brexit, but we got down here and flipped above, and that gave us the extreme pessimism along with the prior chart, and that was an indication that sentiment was running really negative, and it was overdone. Now, at this point, everything seems to be in gear. Things need to turn and reverse from these levels. There's no sign of that yet. Everything is still trending positively. So again, we're running rich, but not overheated and turning down yet. We're going to be looking for a hook to see if at these levels we start running a little bit too rich and then turning down. And that would be our indication that sentiment has run an extreme and is reversing. So at this point, overall, market trends intact. We're above all of our key moving averages. We're in bullish phases across the board in our key indices. Market internals are supporting. This is looking pretty positive overall. All right, well, let's take a look at one other chart. Remember, I've been focusing on one of our momentum charts longer term, and here it is. So this is the S&P on a weekly basis. It's a long-term view of the market, and guess what, right? This is a real motion indicator looking at momentum, and you can see really going back to the first quarter of 2015, we were running out of steam. And of course, you ended up, this is the price chart, with some pretty nasty sell-offs. And overall, right, we just bumped up to trading above that key indicator. And we had not been above it for quite some time. Now, the way I'm reading this is two ways, and this is going to give you somewhat of a potential projection, right? Even though this is a pretty sharply declining 50-week moving average of momentum, we haven't broken above this key level. So we broke above this declining trend, but the real resistance level is just a little bit higher. So in essence, it's very simple. We can bracket the following. If we can take out new highs up here with some decent volume, it will clear this. Your next level of resistance comes in up here. So This number, as you can see, is 24.75, and that relates to your 200 week of real motion. That's where some massive resistance on a momentum basis will show up. And at that point, it's a good 8 to 10% move from here. So with all the money on the sidelines, if we can get a little bit more action and a nice close, certainly on a weekly basis, you'll be able to probably read it beforehand on the daily, and we get some follow through here, we could be in for another 8 to 10% move to the upside. All right, I hope this helps, wraps it up. Have a great summer and next week. Enjoy your summer. Stay frosty. And again, we're definitely in some type of bubble environment with rates going negative, getting more and more negative across the yield spectrum, and definitely flight to safety, money on the sidelines. With this market setting up this way, there's anything that can happen. And like I had mentioned in our text version or the writing for this week, maybe Brexit doesn't occur, clears the air, and we get this move up to the upside. At any rate, just watch the charts. You've got the levels. If you have any questions, please feel free to email us. Thanks. Bye for now. This is Keith Schneider, CEO of Market Gauge, signing off, and see you next week.